Welcome to Stock Talk with Nico Kritikos. Today we're going to do some stock analysis for Etsy stock, ticker ETSY. And the first thing on my checklist we're going to look at is, are they growing revenue? So over the last couple years, they have pretty consistently grown revenue about 42%. And in the most recent year, they actually reported an unprofitable quarter, but that should be a one-time thing moving forward. Number 2 on my list is net income improving? And yes, how I said they did have negative EPS last year, but for this year it's expected to be 2.7, and the stock is about $100 right now. So that puts this company at about a 30 to 37 times PE ratio. Then we get to number 3, and for this year's EPS, it's trading 37 times earnings, and for 2024's numbers, it's trading at 29 times earnings, which may seem like a lot, but is actually cheaper than where it trades historically. Number 4, I would give this a check because Etsy is a e-commerce platform that is a little bit unique compared to other ones, and I think they do have a moat because they have so many different users on their platform. And although Etsy is the biggest part of their business model, they actually own different companies as well. They own Depop, which is a fashion retail app, and they also own Reverb, which is a website that is popular among musicians selling musical instruments. Then we get to number 5. I would consider this a growing industry because e-commerce is going to continuously grow for years to come, so that should not be a problem. Number 6, I would also give this a check because their return on invested capital is about 19%. That is a very strong number, so that's good to go. Number 7, their balance sheet is not in the best situation here. Their equity has not been growing, so that's something we don't like to see. Then we go on to number 8, and their equity is also less than 15% of their market cap, so that's not good either. We don't like that. Number 9, their share count has been increasing over the last couple years, and that doesn't really help out the share price any, so that's going to get a no. Number 10, their assets are not 2 times the liabilities. It's actually not even close, so that's going to get a no. Number 11, the profit margin is 21% usually, and so that will get a check. Number 12, their cash and receivables is sitting at about $1.4 billion, which is much more than their average annual income, so that will get a check. And then they do not have a dividend, and the stock is not over 20 years old. It was founded in 2005. So all in all, we're looking at a score of about 8 out of 14 for this stock. I would consider this maybe a buying opportunity, but their balance sheet is not in the best position. However, they are a pretty fast-growing company, and they should be around for years to come. So I personally am not buying the stock, but I can see the bullish thesis on the stock if someone had it. So thank you for watching. I will see you guys in the next video.